Hello everyone, welcome to Compliance4All live webinar on 1019 and W-9 update, complying with IRS information reporting. My name is Ron and I'm going to be a host for today's session. On behalf of the Compliance4All team, I'd like to thank you all for being part of this event. Today's webinar will be presented by Miles Hutchison. A few words about Miles before we get started off today's session. Miles is a CPA and experienced businessman. He has been an auditor with PricewaterhouseCoopers and the Chief Financial Officer of a $1 billion real estate development company. Miles is a highly sought-after professional speaker and consultant who has presented over 1,000 seminars and training sessions on a myriad of business and financial topics, such as financial analysis and modeling, accounting matters, strategic planning, and compliance with the Sarbanes-Oxley Act. His clients include Abbott Labs, Citicorp, the FBI, GE, Pfizer, and the U.S. Marine Corps. We are honored to have such a distinguished person such as Miles with us to present today's webinar. Now, ladies and gentlemen, before we begin, I'd like to inform you of the program outline for this training session. This webinar is for 90 minutes duration. First, Miles will take you through today's webinar, highlighting the areas that would be covered, and he will then share with you his presentation. We'd also like to inform all our participants, once you're part of this teleconference, your lines will be placed on mute and will remain so until the Q&A begins towards the end of the webinar. Now, this is for the purpose of avoiding discontinuity and for allowing our presenter to speak clearly. I also request all to hold back your questions until the Q&A window begins. 10 minutes of your time will be allotted to the Q&A, during which your questions will be answered by our presenter. Now, if for any reason you get logged out of this training session or teleconference, please follow the same procedure to join in again. And now that we're all ready to start, I request Miles to take it from here. Miles?
Thank you very much, and welcome everyone. We have quite a bit of material to share with you today. It'll be fairly brisk, but you may go ahead and put questions into the chat box anytime you want to. That way you don't have to worry about retaining that information and trying to remember to put it in at the end of the webinar. In addition, I might be able to pick up on it while we're talking, and perhaps the topics of question are germane to the specific delivery at that moment, and I'll be happy to try to answer them at that time. Most of the questions will probably follow at the end. Okay, so your agenda for today is to take a look at the tax revenue issues related to this type of reporting and disclosure, and to try to help you build some best practices to help you avoid penalties and reduce your risks of what we call CP 2100s or B notices. So we'll take a quick look through the issues and try to make sure you're up to date, and we'll take it from there. The collection issues that the IRS has are reported in something called the tax gap on the IRS website, and you're welcome to Google that at any time. Just simply go into the irs.gov website and use a search box at the top right corner. Type in tax gap. This is the most recent information they have available, 2001 and 2006, and we wanted to point out some information to you just to keep things in perspective with regard to the total tax collections per year. It's about 2.6, 2.7, maybe $2.8 billion now. There's a tax gap of about $450 million. Voluntary compliance takes care of about 17% of that, which leaves about $400 million unaccounted for that has to be chased down. A lot of that has to do with underreporting, and some of that has to do with business income. 122 million starts to focus in on our topic today with regard to 1099 reporting. Finally, small corporations represent about 19 million of this tax, and individual income tax is about 36 million. So what we're trying to do is isolate the issues that would be applicable to 1099 reporting, and we've done that for you. There are a couple $100 million worth of issues that the government's trying to make you responsible for reporting to them so they can chase it down and get it collected. The Patient Protection and Affordable Care Act did eliminate the corporate exemption for 1099 reporting, but then when everybody, quote-unquote, read it to find out what was in it, the president said, oh, that was in there? Oh, no, we need to take that back out. So what we have in the way of a corporate exemption for 1099 reporting still exists. It was only contemplated to be removed for a brief moment, and then it was put back. The corporate exemption does not apply to a couple of types of payments, and we'll get to that in just a little bit. But for the most part, corporate exemption is still fine as always. Increased penalties did occur, and you need to be aware of that. The time under which you pay or report has something to do with the size of the penalty. So you can see the old fine in the lonely box in the column 2 there, $50. The new fine structure is if you get caught up within 30 days of the deadline. Let's see, are we still in that 30-day pocket? Yes, we are. Your penalty could be $30 per late filing. The maximum penalties for companies that are classified as large businesses is $250,000 a year. Small businesses have gross receipts or sales under, I believe it's $5 million, and so they're classified as small businesses, and their cap is $75,000. If you're more than 30 days out but get things taken care of by August 1st, of course, you see it jump to $60, and the caps rise. Willful disregard penalty, after August 1st, the penalty rises to $100 per document. Now, that's per 1099, folks. And the caps, look at those, $1.5 million versus $500,000. Willful disregard penalty, if you simply do not file your information returns, there's a $250 fine per return in addition to the late filing fee above. There's no cap. And then there's some additional problems, failure to furnish the statements to the payee. Now you're going to double the fine. So there's a fine for not filing with the IRS, and there's a fine for not filing these with the payee. So just 2 times everything above. Failure to file electronically when required, $100 per item. And fraudulent filings, $5,000 plus potential damages payable to the person defrauded. I actually experienced the flip of this in a prior year. I think it was last year. The Canadian Revenue Group sent a document to the IRS that said I was paid thousands and thousands of dollars from somebody that doesn't even exist in Canada. And the IRS then added that to my tax return, sent me a notice of penalties and tax due, and if that had been somebody in the United States that had filed that document and they could track back on them, I would be able to pursue them for defrauding me or attempting to do so. And they would have had the $5,000 fine plus the fraud charges. As it turns out, it was a Canadian firm that doesn't exist, and the Canadian Revenue Group can't find them, the IRS can't find them, and I'm thinking, okay, that looks like money laundering. I wonder what's going on there. So I requested the IRS pursue that. Of course, they have no obligation to report back to me, and I have no idea whether they did. New law came into effect, coming into effect versus being released is a bit different, but it's going into effect in 2014. The new law was released in, I think, 2012, and it's called FATCA, the Foreign Account Tax Compliance Act. We mention it here because it had an impact on a number of forms, disclosure forms that we put out to our payees. The W-9 is one of those disclosure forms, and it was affected. So we want you to know about that, and we'll take a look at that effect here in just a couple of minutes. Basically, it is an attempt to create transparency on foreign accounts where a U.S. taxpayer, also known as a U.S. resident or a U.S. non-resident, but a U.S. person, has accounts offshore and is attempting to hide assets and the income on those assets in those offshore accounts. That game is pretty much ending. UBS took a hit of $700+ million of fines because they were actually sending people into the United States to